Let's focus on the globe for a bit. Like we said, it's the global flu, which is ongoing. Bruno Verstraete, partner at Lakefield Partners, now joins us on the line from Zurich. Hi, Bruno. Good morning to you out there. This global growth concerns was not something that was unknown, right? So how much more downside do you think there is in the market? How soon could we see, recession parameters more up and about? What are investors talking about now?
Yeah, good morning. I think the infamous R word is clearly something which is the doomsday scenario for most investors. But the reality is at this stage, we're just in a slowing down of growth. It's not anything that has to do with negative growth yet. Clearly, the slowdown might be self-propelled by the attitude of investors as we speak, and might actually also be, to a certain extent, imposed, or at least give the impression that signals are there because of the actions of the Fed last week. Whether they will be then coming out in the real world needs to be seen, and the Fed might still take some counter action to invert the inverted yield curve again to another way. So I think that is clearly something which we need to keep in mind. It is, however, clear that there is a slowdown, and that after a bull market of this length, that investors are more cautious and will take profits much faster. So I don't think that this is over yet.
Mm-hmm. Bruno, so is this? So you're essentially saying it's not so much the yield inversion, etc., but the fact in terms of how the market is reacting to that, right? Because we've had inversions before. It's not, it's predictive, sure, it's instructive and one must pay attention to it, but it doesn't tell us in any definitive terms how far out a recession is coming or anything of that sort, right?
I agree. I think what happens now is a bit of a perfect storm building as to events happening, as to the markets already discounting the good ending to it. One of them is the Brexit. That is very unclear as we speak now. A hard Brexit is possible. Market, I don't think, is fully discounted for that. The second thing, which is the negotiations U.S.-China, everyone believes that they will come to an agreement. That is not a given yet. And on top of it, now you have an inversion of the yield curve because of the actions of the Fed. And I think all of that together is definitely changing the sentiment in a pretty fundamental way, and could by itself, as a self-fulfilling prophecy, push the economy into a recession because of the concerns that the consumer and the investors have.
Right. Bruno, if we're essentially back to the same kind of situation where global growth prospects seem to be slowing down, all major central banks are standing on the sidelines, and normalization is nowhere in sight. And that has, over the years, been pretty good for equities, stock markets around the world. Should we expect the results to be any different this time, despite this pullback we are seeing?
I think we should, for the simple reason that the ammunition that the central banks have at their disposal is much less than previous time. We cannot expect the central banks to do the same level of quantitative easing as they did the first time. First of all, because Europe is on negative interest rates, is pumping money, has not stopped that. U.S. is in a bit more luxurious situation. They do have positive interest rates, so they can lower them. And on top of it, the balance sheet reduction that they had can, to a certain extent, come back. It would be a very bad signal, where last time it was clearly a signal they wanted to rescue, the system we know. Now I think it is more a sign of desperation in order to save the economy. And I think that is the concern. Investors believe the Fed knows something that we don't know yet, and that is a very concerning thought.
All right, Bruno, for the moment, we'll wrap it at that. Thanks very much for joining in. So clearly, global growth worries a bit exaggerated at the moment. It's more of a slowdown, says Bruno, but nevertheless, investors preferring to be cautious. A quick break. Up next, reports indicate that appliance makers have cut prices to account for the slowing demand. Shekhar Bajaj, Chairman and Managing Director at Bajaj Electricals, will join in for a sense of what he's seeing on the ground. Stay tuned.